Hey guys, how are you today? So we're going to talk about losing clients and customer retention. So have you ever lost a client? And have you ever had a client come to you and say, maybe the price was too high, or maybe they found another professional, or maybe they just ghosted you and you were like, where did this client go? Or where are my clients going? Hey guys that are hopping in. So I do want to talk about losing clients and customer retention. I think this is going to be eye-opening for you guys because I put up a few statistics and I want to make sure that you're aware on every single year there is a natural business cycle, right? Hey Monica, there is a natural business cycle. So what that means is you're going to get clients, but it's natural to lose clients. This is called churn, right? When you have clients that don't renew with you year over year or month over month, like it's natural to lose clients, some clients every single year. So let's talk about like what is the average for our industry, right? As a professional service provider, there is a average that you want to stay within, and we'll call this like a KPI. And the interesting thing is that if you know your numbers, if you know how many clients on average you could potentially lose, you can make sure that you compensate that with additional marketing activities. This is why you have to do marketing activities every single year. You can't just rest on your laurels and think that, okay, well, I got 100 tax clients and think that all 100 tax clients is going to come to you every single year over year over year. Now, if you're bomb.com and you're amazing, then yes, but even in a natural course of a year, people move, unfortunately, people pass away. So there's still some natural churn that you're going to experience in your business. If you start off with 100 over the next 3 or 5 years, that doesn't mean you're going to end with 100. So what you want to do is you want to make sure that as you're losing clients, which is natural, you are replacing that, but you kind of have to compensate for the clients that you lost if you really want to experience some growth, right? So if we look at the math, let's just say, let's look at the statistic first, right? So I got this from customergauge.com. They did a survey and they said, according to Business Wire, which is a consulting firm, they, do all these data statistics. They said that in the professional services industry, so you and I, we are what's considered a professional service. We offer our own professional services. They said that the average churn rate, this is the percentage of clients that you're going to lose every single year, is close to 27%. I thought that was high. So that means if you start 2023 with 100 tax clients or clients period, that in 2024 you could potentially lose 27 clients. You guys see that? 27 clients. Now let's do the math because I'm curious, right? 27, what's your average tax fee? Just type it in the chat. Like, what's your average tax fee for just a regular 1040? Let's talk about 1040s right now. I'm going to say $500, right? So 27 times 500. So you're going to be losing about $13,500 in clients on average every single year. 13,500. So how do we make sure that the clients that we're going to lose, which is natural, that we not only replace them, so now we got to replace 27 people plus get an additional 20, 30, 40, 50 clients every single year. So I was talking to a few professionals in the industry, and for the most part, it seems like the professionals that I've been talking to, they've been kind of breaking even, right? So the clients that hadn't came back yet, they replace them with new clients, but their business is still around the same number, right? Anybody else is experiencing that? Where you're like, I lost some clients, but I kind of made up those clients, but you're still at kind of like that break-even point. You're still hovering around where you were last year. Now, this is normal if you didn't take into consideration you were going to lose some clients, right? If you didn't take into consideration that potentially you were going to lose up to 30% of your clientele, some of us could have taken that for granted, thinking, oh, we had 100 clients last year, so we're going to get 100 clients this year. So what I want you guys to know is that every single year we need to be doing what's called retention, right? We want to actually decrease our churn rate. So if the industry average is 27%, I want you to shoot for a 10% churn rate, where maybe you only lose 10% of your clients every year. But you have to be strategic about that, right? You have to make sure that you have retention policies in place to try to keep your clients engaged, right? So what are some retention tactics that you guys can think of? Like, what ways can we inspire our clients to come back to us year over year, right? One, it has to be said, is to provide really great services, right? I'm always fascinated, for example, when I go to, I actually seen a few of my service providers on here, like Pauline. I go to her salon to get my hair done. I go to Scanforia to get my facials. And every time I go into these businesses, they always ask me, how was your day? Do you want some wine or do you want a water? Can I get you anything? Like, they're always like going above and beyond to check in with me to make sure that I'm comfortable, right? So how can we employ those same strategies when we're working virtually with our clients, right? One of the things that you can do is just go above and beyond and explain the tax return or the bookkeeping to your client. So if you had a tax client, meet them for Zoom for 15 minutes on FaceTime and say, hey, Mr. and Mrs. such and such, here's what happened to your return. Here's why you're getting less money, right? Here's why you're getting more money. Just educating them on why their numbers are the way that they are. You just taking an additional step of 10 minutes and hopping on a FaceTime with them on Zoom or maybe Google Meet is going to be a game changer from you, because you have to think, majority of the professionals aren't providing those customized services, right? The majority of the clients are probably too busy, or they probably think that they're too busy to incorporate that into their workflow. But if you do have the capacity, I encourage you to actually explain to your clients. What I used to do, when I actually transitioned to be virtual, I would just send clients an email. I would just send them a recap email to say, hey, here was your refund. Hey, here is, the timeline that the IRS is probably going to deposit the refund into your account. Boom, do you have any questions, right? It was like very straightforward, and I was just churning out those emails every single day, right? Well, looking back, that really wasn't probably the best quality service that I could give being a virtual firm, right? I could have actually at least hopped on a phone call with the client and told them to pull up the tax return, and I could explain to them what was going on. The reason why, or one of the reasons why clients do leave service professionals, is because they said that they didn't feel that the service professional explained to them what was going on with their situation. They were left in the dark. They feel like they, didn't know what was really going on. So if we know that, then we can take action to mitigate that, right? To say, hey, okay, how can I make sure that I communicate every step of the way with the client? Make sure that they understand their tax return. Make sure they understand why the numbers are the way that they are. Oftentimes, I even had clients come to me and they'll be like, oh yeah, my last bookkeeper really didn't explain my profit and loss or my balance sheet, or I never really heard from them, right? This is some of the things that clients would generally complain about. Type in chat just so we can kind of, have like a variety. Type in chat, what are some things that when you've gotten new clients, what are some things that they said about their old tax or accounting professional on why they left them? Type in chat. I've heard I didn't hear from this person. I've heard they don't explain my stuff to me, right? So whatever you've heard from other people when they became a new client for you, I want you to keep that in mind, because that's how that client likes to receive services, right? That's how they like to receive quality support, right? Now, number two, thinking about, okay, how can we retain our clients? One, how can we incorporate a consistent cadence of communication throughout the year? Now, here's another thing that I used to do. Every single year, I would just do somebody's taxes, send them their recap email. Everything would be processed, and I literally wouldn't talk to them until next tax season, right? I mean, you got to think about it, guys. If we're only talking to these people once a year, the likelihood of them going to somebody else is actually going to increase, right? Because we haven't made a connection with them. So how can I, and I want you guys to think about this, and I want you to type in the chat, what ways can you connect with your clients after tax season so they're not just hearing from you in December or in January, right? I want you to think about, okay, well, maybe you can start a newsletter, right? Maybe it's a monthly newsletter where you can send tax tips. And you can talk about, the state of the economy that's specific to an industry, right? So, the economy affects industries at different paces, right? Well, you might want to stay abreast of that and start your newsletter and send it out to your industry specific clients to say, hey guys, here's what's happening for the month of July, or here's what happened last month that you need to know going forward, right? Here's what's changing. Here's what regulation is coming down the pipeline that could potentially affect you. So thinking about how can we be a value add, how can we constantly be in communication with our clients even after tax season, so they're not just hearing from us once a year. The other things that you can do is kind of like the surprise and delight tactics, right? So how can you send a thank you card, or how can you call them on their birthday, right? Little stuff, or sending a birthday email, little stuff like that that shows that you are invested, shows that you care, right, about this client. You might even want to go a step further and do some sort of, client appreciation event, right? You can have an in-person client appreciation and invite all your clients, and those that are, that want to travel, they can. Or you can have a virtual client appreciation event, right? How about you schedule a virtual client appreciation event? Maybe sometime over the summer, you invite everybody on Zoom, and you guys talk about how the year is going. Maybe you have a guest speaker on there that's talking about a specific topic. But I want you to think about how can we reduce our churn rate, right? So if the industry average is you're going to lose 27% of your clients, we want to get that down as much as possible. We want to get that down to 10%, 5% if we can. So think about ways that you are, one, going above and beyond with your clients. You have more of a frequent cadence of communication, so they aren't just hearing from you once a year, but that you're also providing value to them throughout the remainder of the year. Okay. Now, the next thing that I want to talk about is losing clients. When clients specifically say, they tell you, they don't just ghost you, they tell you, I have to cancel services. So let's just say you have a bookkeeping client, right, or a CFO client, and they're paying you on a monthly retainer, right? Well, one, if you've done everything that I've talked about so far, you are greatly going to reduce your chances of clients wanting to feel like they want to leave you. The other thing that I want to mention before we transition into this second part is that ask your clients, how do they want to communicate, right? Ask them, how frequently do they want to communicate? What type of reports do they want to see? What information do they want to learn? Ask them, right? And that way you can customize how you show up for this client, therefore reducing the churn rate that client will leave you in the future, right? Just simply asking them, what do they actually want to see? How do they want to receive reports, and how do they want to learn, right? What information do they want to learn from you, right? That's going to actually help you out too. Now, if a client comes to you and they say, hey, well, I need to cancel services, there's generally two reasons why, if somebody is paying you every single month, why they want to cancel services. Can somebody name the two reasons, or at least one reason? Name at least one reason in the chat. Why would, if you have a monthly bookkeeping client or a CFO client, you've been working with them for months or even a year, and they're like, hey, I need to cancel services. What could be a reason on why they need to cancel services? Type in chat. Type in chat. I'm gonna wait until I get at least one response, at least one, to see if you guys are hanging with me today. So, hey Shanae. Shanae says lack of results, misalignment of expectations, or pricing. Yes. Stephanie says maybe they don't like my services and are finding a way out. Yes. Tree says can no longer afford any services. Tree also says lack of communication. Yes, guys. Okay, so you guys got it. So let's go back to Shanae's. Shanae says lack of results, right? Misalignment of expectations or pricing. Beautiful. So one of the things that clients generally would feel is that they're not getting the results that they thought that they would get, right? They're not getting their results, misalignment of what those expectations were, right? So how can we mitigate that? One, we need to be clear, hey, this is how we're going to get you results. Here are the milestones. So I want you guys to write this down. When you're working with people, have some sort of milestones that you incorporate into your services workflow to say, hey, if you bring us on for bookkeeping, well, in 2 weeks, we should have all of your, your source documents, access to your QuickBooks file, and, we'll start to commence with figuring out what's going on. At milestone 2, which is probably 30 to 45 days out, we're cleaning up the books, we're categorizing the transactions. At milestone 3, we're going to be reviewing with you transactions that we couldn't categorize because we just weren't privy to what exactly they were. Milestone 4, we're going to reconcile the books, run the financial reports. Milestone 5, we're going to meet with you, review everything, make any last minute corrections or journal entries, and go over the final reports. Milestone 6, we're going to meet every single month on this date to talk about various KPIs that you want to track and measure, right? So having like a clear process on what's going to happen after somebody pays you money, and then the expectations on what do they want to see every single month. So the one thing that Shanae says was just expectations and a lack of results. So you only can have a lack of results if you truly knew what were the expectations to begin with, like what were the results that we're going to get. So you do need to quantify, well, what are the results that we're going to get you? If we're doing your bookkeeping, what do you want to see, Mr. and Mrs. Business Owner, right? How, as people, how would you know by working with us was a success? Like, what does success mean to you? Like, as your clients in your bookkeeping clients, your CFO clients, what does success mean to them? Because we might think success is one thing, right? How we view it, how we see it as their service provider, but they might have a whole different expectation on what success meant for them. And like Shanae said, it might have been a misalignment on those expectations on what I know I'm providing versus what the client thought that they were going to get or what they thought they wanted. So definitely having or making sure that the client is happy by setting clear expectations, setting clear milestones, having very specific, consistent cadences of you checking in with the client. Because oftentimes you could be getting the client results, but the simple fact that they hadn't seen you or heard from you, or they don't feel like they communicate with you enough, could be a big reason on why they want to stop working with you, right? It's not that they haven't been getting results, but because they don't see you, they haven't connected with you, it feels like they're not going anywhere, right? Perception matters. The other thing that you guys said was you can't afford services, right? So I think Tracy says, can no longer afford my services. Absolutely. Well, that happens. So here's what I like to do. And you guys let me know how you feel about this particular philosophy. If I'm charging, let's say $2,500 a month for CFO services for a client, and they come to me and they're like, hey, economy is bad, recession, I need to, I can no longer afford this. Well, I want to have an open, honest discussion with the client, right? I don't want to just say, okay, see ya, you know what I'm saying? For me, and you guys, this is just for me personally, I'd rather look at, well, what can you afford, right? Because the services you still need, right? And maybe we can craft a new package for the client based upon, okay, maybe they're getting X, Y, and Z, but right now in their business, they only need X. So maybe we could take away a few services, reduce the price for the client. I want to look at how can I retain this client at the end of the day. So if somebody comes to me and they say, hey, I need to leave, well, let's figure out why. If it's a matter of pricing, how can we work with the client on the price, right? There will be a time where you get into your business where you're like, my price is my price, and you're going to bless and release them. When you're growing and when you're scaling, I'd rather you take a small bite out of your monthly recurring revenue and retain a client and still have monthly recurring revenue than to just let the client leave and now you got $0, right? Now you got to not only replace that client, but you got to continue to find new clients, right? So if you're just a couple of $100s off, let's say the client was like, okay, I can do $2,000 a month. I'd rather you keep the client and take a L on the $500 as long as you're profitable at the end of the day. Are you still profitable? If the answer is yes, take the $500 cut for the client right now and actually help them work on their business, actually help them make more money. At the end of the day, you are a value add to them. When you're providing CFO services, tax planning, bookkeeping, these are services that, they're not just luxuries. Like, they are compliance. They need this stuff. So you want to get your client to say, okay, well, if you don't work with us, here's what's going to happen, right? You're not going to be able to track this. You're not going to be able to monitor this. You're not going to have the insight that you need to grow your business at the end of the day, right? Sometimes we can pull on something and everything else starts to unravel. So you want to bring that to your client's attention to say, listen, I understand there's a recession. I'm dedicated to helping you navigate this. If pricing is a sore spot right now, let's figure out some ways, maybe modifying the services, modifying the pricing for right now, with the expectation that the price would go back up maybe next year sometime, right? Maybe in 6 months, 8 months, 9 months, 12 months, right? This is not a forever price. This is you being compassionate to saying, hey, yeah, it is a recession. Things are tighter. There have been a lot of layoffs, and your client is no different. If Amazon and Microsoft and all these top companies are laying off tens of thousands of employees, imagine as a business owner the decisions that we have to make. Even in our own business, we have to cut some service providers. We have to scale back the services that we're receiving. So I'd rather say, okay, if that's the case, let's scale it back. I'd rather try to retain the client than to lose all of $22,000, $2,500 a month. You get what I'm saying? So try to find ways to work with your client. And I know that's uncomfortable for people, because I was talking to my client the other day. She said she talked to a new prospect, and she said everything was going good. They were, flowing together. You know how some people you get on the phone with, new prospect clients, and you just click? She was like, they clicked well, and when it got to the price, he was like, okay, that's understandable. But she never heard from him again. Like, he didn't sign up for services after she told him the price. So I told her yesterday, I was like, you need to follow up, and you need to say, hey, I really enjoyed talking to you. Everything was going great. I sent you over, the engagement letter and the invoice, but you haven't signed up yet. I'm just curious, was it the price? And I told her to ask him, because in her mind, she think it was the price. So I told her to ask. I was like, listen, go and ask to see if it was a price, because if it's the price, we now have the information that we need to go to the client and talk that through. So here's what I told her. And again, this is just my personal philosophy on these things, guys, especially when you're starting to grow your business. She quoted him like $1,200, I think, for a 1040 with a Schedule E return. He had rental property, right? I think it was like $1,200, right? So I asked her, I was like, well, how much are you charging for Schedule E? She said $600. I said, okay. So I said, what's the least amount that you would be willing to go on your pricing if you could get this client? Like, what's the price point where this is still going to make sense for you? You're still going to be profitable. And she told me her price. Let's just say it was $800. I said, okay, so that's a nice price break from what you originally quoted him. So I told her, I said, listen, go to him and ask him, hey, it was great talking to you. I see you haven't signed up yet. Is it the price? Get him back on the phone and talk that through, because if it is the price, now we know. And here's what I told her. My personal philosophy, I don't know how y'all feel, but I'd rather get an $800 tax client than not. I don't know about y'all, especially if I'm still profitable. I'd rather just have open and honest dialogue and say, oh, it's the price. Well, here's what we can do for you for the first year, Mr. and Mrs. Such and Such. We really, we really are excited about your business. You told us how you want to grow your rental portfolio this year. I know I can help you. One, I'm the best in this space. I specialize in rental property and real estate investors. And so what I would love to do, let's go ahead and discount for this first year so we can show you that we mean business. We want to help you grow your business this year. We want to help you strategize around tax planning. Here's what I told her. I said, if I discount, and as opposed to the client wasn't going to come to her at all because he's like $1,200, I'm not paying that. If he's willing to pay $800, now she gets the client. Now she can actually help him provide quality services. But guess what else happens? What else happens is that now she has the potential to get his bookkeeping. Now she has the potential to do his tax planning because he does have quite a few real estate transactions that he's going to need help on this year. So I'm thinking long term. I'm not just thinking, oh, this is a couple $100 and no, I'm not thinking that. I'm thinking, what's the long-term benefit that I'm going to get working with this client? There's another KPI that's called the lifetime value, right? So if she made a slight concession on her price this year, a couple $100, did it for $800, what's the lifetime of this client? Well, if he signs on for bookkeeping services, let's just say at $500 a month, now she picked up $6,000 in the back end. If he signs up for a tax plan in 6 months because he's purchased, 2 or 3 more properties and he needs some help with strategy, well, that's an extra $2,500 to $5,000 in the next 6 months. So I'm thinking, okay, short-term pain, this couple $100 that I'm making a concession on for long-term results with this client so that I can show them that, listen, I'm the best in the industry with this, babe. So come on over. Let me show you. And let me go ahead and get all of those ancillary services that I know I can help this client with. So that's my personal philosophy. Y'all do what y'all want to do. But this is my personal philosophy. If I'm still going to be profitable and if it's potential upside on the back end where I can sell them additional services, I'm going to do the deal to get the client and to retain the client, right? How are you guys feeling about that? What type of, what does that feel like when I say that? Let me know. Let me know. Yep. So Shanae says, yes, maybe crafting a new package around essentials they need in their budget so we can retain them and grow the contract as they grow. Absolutely. Yes. Yes, you guys are on the same page. So as she says, so you don't have to worry about it being fair to other clients. So you don't have to worry about it being fair to other clients. Well, at this point, this is just retention, right? So I would say, for example, top companies do this. Have you guys ever, I remember, who was it? Was it T-Mobile? I don't remember, but it was some phone company that I was with and I wanted to switch over. And I went in to cancel and they were like, oh, but wait, we can give you X amount of dollars off per month if you stay with us, right? Top companies do this strategy all the time because they know it's actually easier to retain a client than to go out and to get a new client. So I just want you to think about this as strategy, right? This is just you doing what's in the best interest of your company, right? Your company is to be profitable. Your company is to retain clients. Your company is to create revenue, right? And so if we have an opportunity to retain a client by offering some concessions or by modifying the service packages, I want you to do that. I want you to do that. But it's with the expectation that this is not the forever price. This is the price for a set period of time, and you're going to discuss that with the client on what that period of time is going to be. Okay. All right, guys. So let me see, what questions did you guys have? I think I did see some questions in here. So let's see. So Mathern says, how much should I charge for bookkeeping as a beginner? Hey Mathern, so one of the things that you want to do is charge based on the complexity. It's very similar to taxes, right? So in taxes, you charge based upon the complexity, based upon how many forms you're doing for a client. The more complex it is, the more money the tax return is going to be. So we really use that similar strategy for bookkeeping clients. So we look at, well, how many accounts are we going to be doing bookkeeping for, right? Generally, you can look at transactions, right? Some companies have hundreds, if not thousands of transactions per month, depending on their business model. You want to look at that. And so once you have an idea, okay, how many transactions am I doing for how many accounts, and you really see like how complex their business is, you're going to have a better understanding of how much you need to price. The other thing you want to look at is, well, what services are they wanting you to do, right? Some clients think that bookkeeping just covers everything, right? So you want to be careful not to include that. So for example, accounts receivable is not included in my bookkeeping fee, right? If they want me to do AR or if they want me to pay their bills, AP, then that's an add-on fee to their monthly bookkeeping. Bookkeeping is just one account for, you know, upwards to 500 to maybe 1,000 transactions, and it's one price. Generally, I start off at $500 per month. $500 per month. Now, there are some industries that, so for example, if you're doing bookkeeping for a hairstylist, right, and they're only making $70,000 a year or 60 grand a year, then you might want to make some concessions where maybe you start off at a minimum of $350 per month. But you do want to have a minimum amount that you're charging for bookkeeping. And then as the business has, like I said, more accounts, more transactions, that's where you're going to go up in your pricing model. As their business period is more complex. Now you have, you have some companies, they have multiple holding companies or multiple sister companies, and they're doing like intercompany transfers from one company to the next, and you have to do journal entries or you have to do accounting for that. Like, that's when the price goes up, right? Because again, the more complex the business is, the more money it's going to be. You say you got a potential client that owns a small business with one employee. How much should I charge for bookkeeping? With this, I would say minimum $500 per month. Small business to me is maybe upwards to $150,000 a year, maybe 200. One employee. So are you going to do the bookkeeping? Are you going to do the payroll? I would add on payroll as a separate service. Payroll can be, for one employee, maybe 25 to 50 bucks per month for that one employee on top of your bookkeeping price. So I would say generally, just looking at that, I don't know how much revenue the company makes. You can also use that as kind of like a rule of thumb, where you can say, you're going to charge $100 for every $100,000 in revenue. So if the client is at $300,000, then 300 would be, your price. But how I like to do it, I do $100 for every $100,000 in revenue with a minimum amount of 500 bucks. So I'm still going to charge 500 bucks, even if they make $200,000, right? But the price starts to go up if they make more than that. So if they're at $1 million, the minimum is going to be $1,000. And then we start looking at, okay, but how many accounts are we doing this for? How many transactions are we doing this for? And that 1,000 can go up really fast depending on how complex the business client is. Great question. Ashley says, I agree, but when I gave my price for filing tax, they told me they found cheaper and I wanted to just take the cut, but I started to think if it was fair. Okay. And you know what? I would say that's okay. Like, as a starting business owner, if you've been in a business less than, I would say, 2 to 3 years, I would still be doing some sort of concessions. I would definitely look at how can I make concessions on the front end, as long as I'm not competing with TurboTax. Listen, don't do that. So if a client tells you that they just gonna go to TurboTax and they're gonna pay $50, nah, don't do it. But if you were going to charge $500 and they found somebody to do it for $300, then I would take the concession to say, okay, no worries. We value your business. We really want to show you how we can help you. We're not just tax professionals and just going to pop in this number. Like, I really want to help my clients. I want to look at their numbers. I want to make sure that they understand how they can have a better outcome even for next year. So I know I'm going to go above and beyond, and I know once I got them, they're going to want to stay. So I like to keep that in mind, and I'd rather try to work hard to get as many clients and retain as many clients as I can in the first couple of years. Neil says client pays a retainer but then ghosts, followed by call, text, a letter. What else can I do? Oh no, they paid her. I hate when that happens. So if you've actually called them, so generally what happens, and I've had clients tell me this, like they had a client pay a retainer, then a client went ghost, right? And I'm like, well, did you follow up? And they're like, not really. And I'm like, you gotta follow up, right? Like, you have to follow up. But you said you followed up with a call, a text, a letter. That's all you can do. I would say you need to make sure that you put in your engagement letters how you handle situations like that, because this won't be the last time that it happens. So put some language in your engagement letter, like if somebody makes a deposit, like make it known if this is going to be refundable or not. The other thing that you want to make it known in your engagement letter is the time frame in which, if it is refundable, in which you're going to get that money back. So for example, say you have a $500 deposit, you're going to say this is going to go towards services. However, as services don't commence by 90 days, you forfeit your deposit, right? So you can put language in your engagement letter to protect yourself. If you don't have any language like that, then I would send a final letter and email to the client to say that you're going to disengage from them, to say, hey, we haven't heard from you despite multiple attempts. We're going to close out this engagement, cancel this engagement, and send them a disengagement letter. So you could Google disengagement letter, and there's some templates up that you can use, and you actually have to send them a formal disengagement that you're cutting ties. Normally, what I've heard is that when clients get a disengagement, that's when they mysteriously pop up out the blue, and they're like, oh, I was busy, or you know what I'm saying? Like they'll mysteriously pop up. So keep that in mind too. But put the language in your engagement letters on how your deposits are handled and how long your clients have to be onboarded for them to be responsive and onboard. JT says, are you still having the enroll agent session in May? Yes. So I am having an enroll agent live training in May in Atlanta, and you can still sign up for that. Absolutely. Yep. All right, guys. Well, I hope this was helpful. Click the link in my bio, or click the link in my bio, because I am doing a live challenge for those that join to go over like how you can maximize these next month and a half for marketing, how you can get more clients, but then how you can be strategic for the remainder of the year and really focus on those high value business clients that I know the majority of you want. Right after taxes, you need to start to pivot to providing services, right? You need to start thinking about bookkeeping if you already haven't, CFO services, tax planning, tax resolution. You know, tax money is great, but I wouldn't let that be your only source of income. So join the challenge if you really want to expand your marketing and you really want to go after some additional clients, not only this next, last push for tax season, but also after tax season. Yeah. Gilbert says, I'm a registered tax preparer, and this year I had about 50 clients, which was good for me. Congratulations. But what would be the difference if I get my EA than just staying a tax preparer? So I would say the main difference is that you got 50 clients. I would ask you, what type of clients did you get this year? So normally when you become an EA, you are much more knowledgeable on business tax law, and you can actually start going after the partnerships, the S corps, the corporations, the nonprofits. So that would be the difference. So for example, most of my clients, they charge about $1,200 for a corporate client. So imagine if you got your 50 individual clients, that's great. But let's say you got an extra 50 now business clients, and now you charge $1,200 on average, you're going to make an extra $60,000 in revenue. Or let's just say you got 50 individual clients and maybe you were charging $400, so you made about 20K. Well, but what if at least 10 of them were corporate clients at $1,200? That would have been an extra 12K, right? So you would have been at like 32, 35K for the year. So I would say that's the main difference on becoming an EA. You're just more knowledgeable about business tax law, and now you can go after those partnerships and S corps and corporations and charge more. Yes. Christy says, can we still join your membership? Yes, you can still join. So the membership is good if you want access to our private Facebook community, if you want access to coaching calls. So we do coaching calls every single week on Mondays. So the members, and then you get access to all the courses in my library. So a lot of people like having access to all the classes that they get to watch. As far as the challenge is not included in the membership, but I priced it really low. So if you want to join the challenge, you can click the link in my bio. Oh, and FYI, there was somebody that created a scam page. Thank you. Somebody posted that. Yeah, that's not me. I'm never going to ask you to give me money. I'm never going to ask you about Bitcoin, like investing in Bitcoin or anything like that. So if you get somebody that starts to DM you some information, they started a page and they pretty much copied everything on my page. Just report it for me. Just report them. I'm always going to send you guys to a link to say, hey, and there's going to be an actual link connected to my company if you want to join a class. I'm never going to ask you for like Bitcoin or ask you to send me money or anything like that. So just be on the lookout for that, because these scammers is getting out of control. They are getting out of control. All right, guys. Well, click the link in my bio if you do want to join the challenge, and I'll talk to you guys soon. Bye, guys.